Hey guys, welcome back, and in today's video I'm going to share with you how I always use ICT mentorship to help me have a good entry and a good exit in the market. And guys, I need you to do me a beautiful favor. You should consider subscribing, turn the notification bell on. This will really help me. We are in the road of getting a thousand a thousand a thousand subscribers. So guys, if you hit that subscribe button, that will be very beneficial. And let's get into the video. So on how me personally I use ICT mentorship for nice entries and a nice exit. First there's some rules that I always follow. First, you need to identify where the market is going. It's either the market is going up, which is an uptrend, or the market is going down. And the second thing is you will go in your market. You start on a higher time frame. Because I'm a little bit of a scalper, I always start on a 4 hour time frame. And then you identify your key zones like supply and demand, support and resistance, order blocks. And after you mark those area on a 4 hour time frame, on a 1 hour time frame, you will drop down to a little to maybe 5 minute time frame, 15 minute time frame, or 1 minute time frame. And the next thing I'm always doing is I always ensure I enter my trade during London Open. So because it's a very key thing. You should even consider a time. Time is a key factor. Which session are you willing to trade? If you are willing to trade the London New York crossover, you should be there when the London New York crossover is happening, for you to manage to capture a move that you are intended to capture. For me, I always like to trade during London Open. That is the best time because it's aligned with our time zone. I'm in Kenya, and that's really aligned with our time zone. Because on London we are only 2 hours behind, so it's really good for me to trade during London session. And let's do an example with this GJ pair. First, we are on a 4 minute time frame. The first thing we notify here, we have like a resistance or a supply area, because the market came, touch this area, drop massively, and then now the market is there on the second time touching. After now from here, because the GJ market is going up, if you are looking for sales, we are not looking for big moves. We're looking for little some pullback, maybe that will give you 30 to 50 pips on that day. And then after we have identified, because the market has reached here, we had first rejection. The market came here, we have first rejection, second rejection, third rejection, and this rejection were happening during New York session and Asian session. That is another thing that you should really consider marking, because sometimes the market will come and tag the Asian low or the Asian high before going either way, either up or down. After we have identified our area, I will drop to 5 minute time frame, because the market is already aligning, and I'm only looking for my entry during London session. Okay, and if you see this gray shaded area, this is Asian session. So meaning the Asian high was here, and the Asian low, and now the Asian low was about there. So you can even try to enter when the market has broken this Asian low, or you can just look for market when the market has opened, and then try to capture the down move. So here we are looking for a little like a pullback. First, let's go back to a 4-hour to identify where our target will be, where our take profit will be. If you see this market, the market was just going up. We have this first imbalance, and we have this second imbalance, and that imbalance we have this imbalance, and then we have this imbalance. So for your target, you only need the market to come and tag this and fill this imbalance. So if a market fill this imbalance, that will be your take profit. You will enter around here, and you will only target the market to fill this imbalance, because remember, this market is in an uptrend. So you don't need to capture big moves on a pullback. You only need to capture small moves on a pullback, because the market is in an uptrend. So it will be wise for you to capture only small moves like 30 to 40, 50 pips on that day. And let's drop on a 5-minute time frame. Now when it comes to your entry criteria, there's one thing you really need, you really need to consider for you to find a beautiful entry. You want a market to consolidate, or a market to form an order block before market coming tagging that order block. A good example is here during Asian session. We had this area of market consolidating. We had this area, we had this equal highs, market drop, market left like an imbalance, market came, filled this imbalance, but the market was consolidating before the New York open. And then the New York open, we had this drop, this impulsive drop, and then this impulsive drop left us with an imbalance. Now this impulsive drop left us with an imbalance, and now you want market to come at least fill 50% of this imbalance. Now if you drop on a 1-minute time frame, we had this Asian, we had this imbalance. Now if you see clearly, the market just dropped during Asian session. When Asian was about to close, then the market came up, filled that imbalance. We had this the law of an order block. The market came and filled that imbalance. And if you are aggressive trader like I am, you will enter here. Your first entry will be about there, and you will put your stop loss above the Asian high, and then you will target the first. You target that 4-hour imbalance that the market want to fill. And if you see here, we have like a 28 stop loss, and a take profit of at least 40 pips. That is 1 to 4 risk to reward ratio. But so you can see this market came, took those low, and then market went up. But if you look on a 5-minute time frame, there was a level. If you look on a 5-minute time frame, we had this area of consolidation, this area of our order block, and the market was forming and the market was leaving imbalance in the market. We have this first imbalance, second imbalance, and now the market came, failed this imbalance, because you see fear market reacted to this area before going down and breaking. You have this entire imbalance. Then the market came, failed this entire imbalance. If you see here, see the market came, failed that entire imbalance. We have another imbalance here, and we have another imbalance around there. The market came, filled this first imbalance. See, the market came, filled the first imbalance that we talk about on a 5-minute time frame, and this is the same imbalance that is in a 4-hour time frame. Came, filled the second imbalance, that's the same on a 5-minute time frame, and then came, filled the third and broke a little bit, and then before the market going up, and that will be like 100 plus pips. So here you risk like 30 pips to gain 100 plus pips, and that is how I use ICT mentorship for my entry. When it come to my entry, I always look for any imbalance or fair value gap on a lower time frame. I will enter my entry there during London session, and I will always, when it's come to exit, I always target the last imbalance or a previous low or previous high, or sometimes I only look for the market to take Asian low if I'm trading London session, or Asian high if a market is going up. And that is for today's video. Please guys,